So welcome back to a quick intraday trading update. Right now I have the chart of Nifty 50 and this is a 30-minute chart of the index. So I was of this view that a failure to cross above the previous high of 26,100, let me be precise, 26,104, would mean that you would still be in a sideways prolonged corrective phase, and I would like to label that as an ABC wave D. If I were to go and count the internal subwaves, then I would have to count this as some sort of flat, as ABC. So if you are drawing a flat, then you expect that, come on, market might go towards the previous low, which was around 25,718, roughly 50 points lower from here, then do a double bottom in wave C, and then you would complete wave D. Does that mean that you really have to go down another 50 to 100 points to do that? Not necessarily, but if you do that, then there's a better chance to place yourself in the next trade. So now I am of this view that maybe if wave D is complete, we would now start a wave E on the higher side, and that would take us somewhere around 26,400 to 500 zone. That is the bare minimum level that I'm looking at. And if I were to draw a trend line, let's say, so we are pretty much at there. We are at the support junction right now, and the top end of the channel comes somewhere around 26,500 to 600 range, same as we got through Fibonacci targets. So there's a possibility that you would start wavy on the higher side. To say with confirmation that you have started wavy on the higher side, for that you would need a close above 20 EMA, which comes in around 25,850. That's roughly 70, 30, 50, 80 to 100 points higher from here. You do that, then you close above the interim swing high, that is around 25,937, and then you would have started wave E on the higher side. This is the case on Nifty. If I were to go look at the chart of Bank Nifty, I would have to slightly shift this wave D from this low towards this truncated low of 57,726, 57,656. So you do that, you complete that, then you close above the interim swing high, would mean that you have started wavy on the higher side. And secondly, a second confirmation that we could look at is a break above this trend line. So you do that, that would be a secondary confirmation that you have started wavy on the higher side, which is going to take us towards 60,000 levels. The lower Bollinger Band support comes in around 57,740, roughly 150 points lower from here. Even if you go towards that level, you would still be in wave D. I'd like to keep this view that we are still in wave D until and unless we don't close below this low. If we don't close below that, then you have a substantial chance that you are going to head higher. I think that was it for the video. Thank you.